All right, good morning. Marcus gonna open right now, apparently. Up and down and up. UAL getting killed today. Hmm. Hmm. Message from the CEO. I like the action this morning, actually. I wonder if this is gonna be one of those days where it gaps down and just rallies hard. Hey, morning, Rob. Reading this letter from United CEO is us down 7% this morning. Actually, it's already bounced back a little bit. I'm actually slightly intrigued at a position down here, or adding to a position. MJ? It's like MJ's up. It is not up. My account lied to me. I don't think things have been updated yet. UAL, MJ down here, Tilray down here. I think UAL's not too bad this morning. Little pullback to some moving averages. They did. They gave it up again. Yeah. But still didn't count as a distribution day. It was basically, was at least in the future, slightly up. But all right, let's see what's up here today. DocuSign, Sans, Oxel, Roku, Space, Oak to Trade, Des Restoration, Hard, MongoDB, Match.com up a little bit. So Match.com started breaking out over our long-term turnaround trend line during the crypto power hour yesterday, and so I did jump on some of that. Very good volume. So we'll see what happens to Match.com. Kind of rolled over a little bit, but nothing too crazy. You see Match.com rolled over too here, but then by the end of the day, ended up with a couple of really high volume candles. So yeah, we'll see what happens with that. Yeah, SOX ended up not really collapsing at the end of the day, but kind of collapsing at the end of the day. So that's 2 days of some pretty big downside moves. Now the good thing is that we're still well within ranges. So while it kind of looks scary, it's uh, it's not too bad yet. Volume was pretty low yesterday, although it did accelerate into that sell-off, which is not good. But so far still within ranges, nothing crazy. So check out global watch list. VMware up 10% today. Okay. ABIO 400%. I'm assuming that's some small biotech. Sure wasn't yesterday it was up 400%. Yeah, you can day trade some of these patterns, but other than that, you can't swing it for too much. All right, what do they have down today? CGC. Oh, wow. Really taking it on the chin. 23 down to 17. Lost 1.3 billion. Undergo strategy reset? How do you sell weed? What are you gonna reset? '2020 will be a transition year. Near-term profit opportunities. That's an interesting statement. Ooh, they've withdrawn their previously announced milestone for achieving positive adjusted EBITDA and net income. Ooh, sounds great. Wow. Wow. RH, 2.3%. Okta. Okta right back at it. Beyond Meat. Right back at it. A little bit. We got a breakdown point up here at about the 131. Trade desk. Still kind of like this trade desk trade. All right, SOX will bouncing back a little bit more green. UAL coming back strong this morning. Hey, morning, Aram. Speaking of giving up yesterday, ACB. Look at ACB. Yeah, it. Yeah. Not happy with ACB. I'm probably just gonna have to cut this. Decent size loss. Nothing, but the position size wasn't too big, so that's a good thing. I'm just bowing out. Just bowing out of ACB. It's about the only thing I'm giving up on, though. AMD and NVIDIA right next to each other up here. Apparently, so is everything else, though. Yeah, so AMD doing pretty good. I still don't mind it down here. Still working on its handle in that cup and handle pattern. Had that big red day 2 days ago, spiked down here to the under the 50-day moving average and closing nicely above it, which is great. Way up here. So we've closed yesterday below that level, but if we can break through that 20, I don't know, we'll see. Tesla Lucy positives. Tesla still looking really great in its pattern here. I'm not quite sure what's the stagnation for. Volume is very declining at this level. Very much declining up here. We've been under average for it's like the past week and a half, which is different. We haven't really even here, just looking at volume, we haven't really been too much below average. Can I zoom or something on this one? Yeah, we'll just do that. Yeah, so here we're significantly under average volume. And now we have had elevated volume, obviously, because of the parabolic run and the correction with the market, but in the handle getting very tight in volume. Getting pretty much back to pre-massive bull run levels. And fairly happy up here at 18. So finding an equilibrium at, well, 800, not 18. So you go from an equilibrium down to about 250 to 800 on Tesla. And yeah, if you look at the past little bit here, we have the shakeout day the other day in the markets here. Does appear to be a general rollover, but nothing too aggressive yet. Looks like support of the 20-day moving average. And the 50 and 200 are way down there. So not quite sure how Tesla's going to play out here. I don't know if I want to blanket buy more shares or wait or exactly how I want to approach that, but just hold on to what I got. All right, match at our long-term turnaround breakout point here. Not running up for the hills quite yet. Yeah, the Nasdaq stalling yesterday, but also found a little bit of support. Let's pull up the Qs and see if we can see. So we did a great job rallying there, and then definitely started some increased selling pressure. Slap down. And then a little bit more buying into the end of the day, as much as 2 million. 2 million plus shares coming from 4, 5, 600,000 on average in this area. So nothing too crazy. Nothing too good, nothing too bad. And we're still hanging up here in the middle of our top Bollinger Band. So yeah, you're going to get some bouts of distribution every now and then. Well, I wouldn't be surprised if you got even more flat up here. I don't think that'd be too surprising. All right, Soxel balancing this morning on pretty decent volume. Check out Boeing. Oh, FYI, ladies and gentlemen, no stream on Monday. I will not be here on Monday. Sorry, I'm tired today. Watched one too many shows last night, and then my son had Eric at about 2 in the morning. We had to attend to for a while. So sorry, not my usual chipper self today. Skyworks. Almost didn't even do the show, honestly. Like, I need some damn sleep. All right, DocuSign. Wow. That's some strength in DocuSign. Beautiful run, too. Not the neatest one, but since it started kind of rallying here, it's just been really, really consistent. Zoom appears to, it does have a bigger base? Not really. It's not really tight action. ZYXI is actually looking pretty intriguing. We talked about this briefly the other day, but yeah, I think there's like a 2050. Yeah, there's 2050 right there. Resistance points here on ZYXI, some undercutting the 20 and the 10-day moving average, but nothing too bad. This thing's already had a couple of nice pops on it. Good. Ooh, Soxel 4% now. Oh, there we go, Soxel. Yeah. AMD, Mongo, RH. INMD yesterday. I completely forget what these guys do, and I'm a little too lazy to look it up right now, but they were trying to break out and may still be trying to break out of a shorter term base right there. Not the most bullish setup, but pretty good. Pretty good setup there for INSG or INMD. I don't have any positions in it. Wasn't really nothing on the table for me there, but that for a general stock trade, that could be a good one. We're still beating down on that one. Manitowoc. Not liking living outside of that base. Wow. I was looking at an entry yesterday too. It just never popped back up. BEP. What are you up to, BEP? Huge ninja star pattern. Okay. All right, let's go Soxel. Pretty decent volume this morning. And now we're getting a little bit more follow through volume on that small breakout candle. Hope that keeps going. I mentioned Trade Desk on a potential breakout here. This is one to watch. Ideally with a lot of volume stepping in, which we don't have yet. Volumes gives you a lot of confidence in a trade. Usually it's one of the things that makes it work too. Atlassian. Wow. Look at that. Came all the way down that one day. This isn't what I'm like actively watching every day, so I missed this, but that would have been a great pickup. Kind of hard to do because you're not really near a moving average, but you did come back down to this prior breakout point, and then right back at it, Atlassian. Kind of in a longer term turnaround situation on the weekly chart, or just a bigger base, depending on which way you wanna slice it. But yeah, pretty nice reaction on that sell off and bounce back. That's really bullish. Look at where, yeah, look at this thing on the day on the intraday. Just a Yeah, even this is bullish. Obviously, a big selling candle at the open. Everything's going to have that. Then you have kind of a stalling candle and a nothing candle on high volume, and then a low volume sell off, and then a lower volume double bottom here, and then it just rallies the whole day. As far as price action goes in a day that's fallen apart, that's not the worst you can have. And then yesterday, just normal day. That's called a shakeout. Hertz Rent-A-Car up 7%. See? Told you, Rob. Don't blanket short anything. 7%, that would have ruined you. Mossy up here in a smaller consolidation. Doesn't have too many of these. What the hell does this thing do anyways? This thing is like on fire, and I have no idea what it does. 10x in the past like 5 years, it looks like. 1, 2, 3, 4, 5, 6 years. 10x in 6 years. That's pretty good. There we go. Stocks mixed await Trump's remarks. Oh, yay. What's he going to say now? Oh, I think it's due to China stuff. Mossy Corp, 97 composite rating. Wow. Develops patient monitoring products which include a monitor, circuit board, consumables, and reusables. Okay. Still don't know much about them. Medical cruising stocks. Huh. So apparently pretty decent right there. Yeah, this thing's just been straight up. I wonder what Trump's gonna say. It's gotta be the China thing. Let's go. Let's go watch. See what IBD has to say about it. Awaiting a press conference on China announced by the White House late Thursday. If you remember 2018, we dropped because of two reasons: rising interest rates and China. So if China's back, we'll see how the market reacts to that. Could be another headwind. Could be another headwind. which would not be good. I'd say Intel in a buy range. So there's your cup and handle, and that's your buy range right there. Doesn't look like it didn't really have breakout volume though. So I'm not sure if you want to be jumping in on some Intel unless you're taking a longer term position. Oh, Big Lots. Nice. Oh yeah, he has Twitter War too, that's right. I'm not sure I've ever really looked at Big Lots. Do shop there from time to time, but wow. Wow. What a reaction. This is one of the more interesting charts we've seen come out of coronavirus. Kind of stuck in a deep downtrend, takes a pretty small leg lower comparatively, and then rallies through breaking recent highs. That's intriguing. It's like a 30% quarterly dividend. So it's a buck 20 a year on, well, now $40. Not super great. Yeah, Rob, it is strange. Just rallies. You got a little pause right here, but yeah, I've never really looked at Big Lots. I do shop there. It's actually a pretty good little store if you got to buy some. You don't want horrible garbage stuff and don't want to spend a lot. If you want garbage stuff and want to spend nothing, you go to the dollar store, right? If you want not really garbage stuff and don't want to spend a ton, you go to Big Lots. If you want to have decent stuff, good stuff, and you want to spend a lot, you go to Restoration Hardware. It's kind of how it goes. Yeah, interesting action though. A little bit too freaky for me. I don't like that. I also don't like the fact Trump's going to hold a China press conference. That's probably going to murder things. Just saying. You know Trump in China. Off the beat. Yeah, there's actually quite a few in my peripheral neighborhood here. So every once in a while, yeah, you end up finding these stores from time to time, and then you forget about them, and then you go back to them. Yeah, we forget about Big Lots for like 2 years, and then I probably haven't been there in like 9 months. Actually, yeah, Christmas for Christmas lights. We go there for Christmas lights. Yeah, great place to buy Christmas lights. Halloween stuff too. That's usually when we go there, actually. Christmas and Halloween. I got an alert on Roku. Must have been. Oh yeah, okay. It's an undercut and rally, but it's not really that interested in rallying, so not much to do on the Roku. SQ up 2%. Let's look at some Square. We haven't seen Square in a while. Okay, kind of a declining channel situation here. See if it's able to break up. Does have interesting pattern happening. Nice volume this morning at the open. Not sure if I'm ready to start jumping right in on this one, but If it breaks that trend line, it could start to go in a long-term turnaround play, but it definitely needs some volume. I want to know more about this damn Trump press conference. It's going to destroy things. I mean, the market right now is kind of perching, you know? Worries about his Trump news conference on China. Yeah, right. Everyone's worried about that. Randers. Not sure if I've ever been called Randers. Good morning, Tyler. Yeah, Trump's China press conference could mark end to cautious whatever. Yeah, it could. Oh, cautious approach to Beijing. Oh, okay. I was thinking into this cautious market situation we're in, this market bull run. Ah. 3:15 when the news of the press Friday presser hit the wires, the Dow Jones fell 300 points. Yep. Yeah, our we have noted as of late the market stalling a bit. We're not broken yet. I hate to jump out of a market that's not broken. That's I hate to do that, but I don't know. Trump and China market doesn't like that combination. Didn't like it in 2018. Can't assume it's going to love it this time around either. So yeah, not quite sure how to handle that. May have to reduce some positions or something. Yeah, I don't know. I don't know. That's a tough one. Hmm. I got in the market before the follow through day. I might not feel bad getting out before it's broken. Yeah, I mean, it's been a great run. Kind of talking like it's all over already. It's been a great run, guys. It's gonna be a press conference. It's all over. China. China. Destroying the stock market, except for Tesla, which China loves Tesla. I don't know how Trump feels about Tesla or Elon Musk. I don't even know if he has an opinion. No, he doesn't like Bezos. Probably doesn't like Gates that much. Although Gates doesn't really stick his nose out that often. Um, Not sure about Tesla. It's an interesting one. You want Tesla plant to open, so that was somewhat encouraging. I don't know. I think I may have to close some positions here. Let's step out of my own way a little bit. I don't like China press conference, man. I'm not, or Trump press conference. I'm not happy about that. How did Soxel do in 2018? Not that hot. Not that hot at all. Sold off with the rest of the market, obviously. Yeah, I'm thinking something similar, Rob. I got that IVR position. I may hold on to that, although that's kind of in its own little downtrend. Kind of, yeah, not something I usually do, but we'll see how it goes. Apparently, I got a 50-cent dividend. I'm not sure if I ever actually got it. Yeah, the chart wasn't that intriguing. I mean, it was intriguing, but not enough to be interest. Oh yeah, that's a lot of volume. Yeah, yeah. There's no need to do anything up there. Maybe sell a 40 call. Sell a 40 call for almost any time frame. Maybe. Maybe. Yeah, I definitely think taking some stuff off the moving to more cash position is probably. I can't imagine Trump's going to come out and say good things. He doesn't do that. Trump doesn't come out to say good things, especially about China. Well, okay, so when you sell a call, so let's go to the thing here. So yeah, let's say you want to sell the October 40. So if you sell a call, you're gonna bank basically $5, basically $500 because he's going $100 lots. So your broker's gonna put $500 in your account when you sell this. And then as time goes on and it evaporates, it's gonna be worth less and less. So you'll keep all that $500. If you buy a put, like let's just say you buy this 580 at 40, so you're betting it's got to get down to 34.20 before you start making money. Um, but when you sell a call, you're actually taking in money from minute one. When you buy a put, you're spending money from minute one. So when you're selling, you're actually becoming the market maker essentially. So yeah, you can actually sell me something, Rob. You can say, okay, I want to write this option. And I say, I want to buy this option, and then you can actually sell it to me and bank the difference in profit there. And let's say you do sell this for $5 and you close profit out at $2, you make $3. Well, it's not quite the same, because well, think about it, right? So your maximum gain on this is the $500, but let's say everyone realizes Big Lots sucks and it drops to 10, then this is worth $30 and you're making like 5x. So when you're selling something, you can only take in the premium and nothing more. There's also a lot of margin requirement because you are responsible for the 100 shares associated with that call that you sold. So if it goes above 40 and someone takes those shares away from you, you have to produce those shares. So and then Yeah, you're not responsible for anything when you buy except for the price movement. Yeah, so I mean, it's not so that's $3,600 to make $500 over the course of 140 days in this particular instance. It's not the best get rich quick scheme, but most options do expire worthless, and so generally it can be a pretty good, but you got to have a big bankroll, and I think there's also other things involved technically that people that do that should know. What do you mean, Aram? You said since stores start opening, do you think we're in a V shape or most likely we're going to new low? Um, well, we're already kind of, I mean, the market's already kind of Ving here a little bit, so we're towards the top of the V, and we've been stalling here this week. It's been in a bit of a stalling situation, so um, why can't I scroll? Oh, that's weird. Hold on a second. That's a trip. I didn't realize it did that. Volume spikes on a weekly chart for big lots? Is that what you're referring to, Rob? Well, to maybe answer Rom's question, I don't really care about stores opening. I care about the stock market's reaction to everything. In all honesty, it doesn't really matter to me if stores are open or closed, or I just care about the market's reaction. So, I mean, we've already been in kind of a V-shaped recovery, at least on the Nasdaq. On the S&P, we're still lower. I think the SPY is still lower. Um, yeah, I mean, it could be one, two, three, four, one. Yeah, it looks like it's earnings. But yeah, in terms of the recovery, I'm not really. Yeah, it's just a market action around. I mean, we were down here in the depths of it. We were talking about entering some smaller positions. We had our follow through day down here. It's been great ever since. While everything else is talking doom and gloom, and no one can believe the rally, but yet, if you're in TQQQ, you're up 100% from the lows. So I don't think it really matters. I think the market action matters, and yeah, it's hard to say how things are going to recover. We don't get to decide that. I don't even really pretend to know that. Again, just following the market and what it does, and listening to it is the thing to do in at least the way I do things. Yeah, Rom. Sorry, not much of a help for that question, but see, here's the problem. When you start to when you start to play a forecast, when you try to forecast, you're playing a losing game. It's like trying to predict the weather a month out from your front porch. It's impossible. So all you can do is just watch the clouds roll in and see if they're dark or not. That's kind of all you can do. Um, all right, fair enough, Aram. Yeah, I'll say this. I will say this. The less forecasting you try to do, and the more you just try to be a sponge to what the market's telling you, the better you're going to do. It's just the way that it is. There's so much garbage news out there, just everywhere, garbage, garbage, garbage. And so I don't think you take anything with a grain of salt. You just ignore everything essentially and look at the charts. That's pretty much all you can do. So UAL hasn't quite started rallying back yet. Whoops, that's not what I intended. So not too bad here, but not too great either. Yeah, I'm with you a little bit on that one, Rob. I mean, just from general, watching the market for a long time, it doesn't tend to have massive rallies like this and then give it all up. That's usually not what it does. Something else would have to happen, and it can. I mean, we've had moments in history where you've had different events. So remember in 2018 we had China and interest rates, and we went into a pretty deep bear market very quickly. If you remember that, right? You guys remember that? And then we did fine. We had coronavirus, and maybe we go back into China. I mean, it could happen, but it's likely a different catalyst. But I don't know if it would happen. I don't think it would be coronavirus related. And the way things are going in terms of shutdowns, we're opening back up, and I don't see I see huge resistance to us shutting down again. If they were to even attempt that, I don't even think that's politically feasible at this stage of the game. So I think we're opening back up, and we'll recover a little bit. Minnesota, aren't they rioting because of the recent death of I forget the gentleman's name, but yeah, that's some bullshit. Well, we've seen riots happen. I mean, I lived in California during the Watts riots, and I wasn't that far from. I mean, I was young. I didn't really have a. I knew they were close, but I don't think I knew the distance. To this day, I still don't know the distance between Tustin and Watts. But it most riots tend to stay fairly contained. Yeah, exactly, Rob. We get tired of stuff really quickly. So yeah, exactly. We're definitely over the virus. Doesn't mean the virus is over us. And if you are still in a higher risk category, you definitely should be taking precautions. But I see a lot less masks out there than I used to. Hmm. All right, so Matt's rolling over a little bit here. I'm going to exit that match. I entered a match position yesterday. I'm just going to exit it. It's going to reduce a lot of this stuff on my plate. Look at BJS. That could be a very racy acronym, Aram. And if I were to look at the BJs, where would I find them? What's BJ? Oh, it's a check mark. It's interesting. Wow. That's interesting. Yeah. Spam and Skippy peanut butter. They make Spam and Skippy. Oh no, BJ Wholesale. Huh. Yeah, something happened there. That's pretty decent volume. I think I've seen these around town before. Okay. Yeah, not too bad. I mean, if it's able to support there, looks like 35.50 with a couple little jots beneath it. It's able to support that. You could take a lower risk entry point somewhere down here and have a pretty tight stop loss. Oh, you bought it? Okay. I mean, it is a nice bull flag. I'm not sure. I don't know much about it. Let's go look at IBD. So 97 composite rating. Dollar General grocery outlet, Five Below. BJ's, okay. In the eastern US, I lied. I guess they're not out here. May have seen them around the stock market water cooler. Wow, 165% EPS change, 53% EPS change last couple quarters. That's good. Sales change, 21%. It's good. All in all, good. One, two red dots in this whole thing. And yeah, I'm not sure why these are not applicable, but yeah, it's actually, that could be a little bit of a sleeper right there. 5 billion market cap. I guess you got to check their expansion plans. Oh, they had an article yesterday. Apparently, they were involved somehow. BJ soaring last week on strong earnings. That's all they mentioned. See what they're if they're expanding. They got to be expanding. When you get these retailers like this, it reminds me a little bit of William O'Neill's stories about Home Depot and Costco, and he talked about how they were expanding. Just they were going ever building tons and tons of stores. Couldn't find investor relations. Clubs, gas stations, million members. See, when they eliminate East Coast and start going nationwide, that's when this thing's going to blow up. Oh, I don't have a lot, do they? Oh, here we go. That's a weird FAQ. When is the company's next 53-week year? That's strange. Yeah, how are you growing? Additional highlights. See nothing about new stores. I mean, I get everything's coronavirus based, but Wikipedia, are they going to keep a record? Nope. Ah, come on. What company doesn't talk about how many stores they're opening? Every company says we're opening 12 new stores this year. Maybe BJ's is happy just doing what it's doing, but hard to know. Oh, where'd you find that, Rob? Good looking. So 4 locations, like a 5% growth rate. BJ cuts back on expansion plans. Well, here we go. Well, did better than me. So no shame in your game right there, buddy. Good job. Expanded sales at established locations by 1%. Open 2 new stores over the next few months. One's in Michigan, I think. It doesn't look like they're like just growing like mad. So, no, I'm not a Motley Fool member. It just happened to be on their fool.com. It's one of their public ones. I don't know. Motley Fool. I don't know. They're too salesy. It's weird. It's just weird. Hmm. All right, so it doesn't look like they're rapidly expanding. But if they were to actually rapidly expand because they're a regional player, that could be really good. All in all, though, I mean, not too bad. Good growth. I mean, good EPS change. I think a lot of retailers are probably going to have that. It's probably like INSG or something like that. Like, and then see, here's the thing: what are you going to do with it? Like when they give you the pick, like let's go to INSG. You can usually actually Google the answers. Like, what are you going to do with this chart? You just going to buy it and hold it? Actually, I don't think this is. Is this the one? Yeah, I think this is the one. Inseego, isn't this Inseego? I don't know. Yeah, it's they're okay. I mean, can't say they're horrible. I'm sure they said buy Netflix in 2002 like they talk about every other day. Can't get away from them though if you're involved in the investing markets. Well, yeah, it's true. But I mean, You can say that about a lot of stocks. If you'd have held this for 20 years, you'd have done really well. Yeah, thanks. Probably. But I don't know if they issue sell signals or not. I don't know. I don't know, it's just weird to me. Just kind of strange. Yeah, I actually saw a post on Reddit the other day about some dude that took $100,000 account and it's at like 4.4 million right now. Um, I really like what he does. I'm not sure if I could do it personally, but actually what he does is he hyper focuses his account into basically one position. Like for instance, he's had AMD for a while, and obviously AMD's been doing really well. But like he held through this whole drop here for that whole year, and then he obviously he's been holding through all this too. So the dude just what he says, he's like, I really do my research on my companies, and I just hold them. It's like I don't care, I just hold them. Now, granted, AMD's been on a huge upswing. There's gonna be a few other stocks like that, but that's really difficult to do, and that takes a lot of guts. Takes a lot of guts, but he's made it from 100,000 to 4 million in 4 years, probably all through AMD because it's been up so much. He mentioned like four or five of those he's been in the past couple of years, but yep, 500. That's 500%. There's about 500,000, so I'm not sure what else he's been in, but yeah, it's pretty good. So I don't mind strategies like that where you actually know what you're investing in, like Warren Buffett does. I don't mind that. I don't mind that at all. Tesla is probably one of the only ones I've thought about hodling. Just hold it because it's going to be good. Like I know this company, you know, at least as much as you can know a business. But like I could pile everything into Tesla and just watch it, and eventually it'll go up to four, five, six, $7,000. Probably takes many, many years, but that would still be a tremendous gain if that were to happen. I don't think that's extraordinarily foolish as long as you know what you're investing in and you know the market trends, and the company is doing, like AMD was doing the right things for a long time. They were doing the wrong things for a long time too, right? Doing the wrong things forever, and then they start turning it around, and they bounce back really within a year. It's pretty good. Yeah, real Tesla every day. Yeah, why not? It's worked out well so far. Yeah, I mean, I don't know. The Tesla story to me is just a no. It just I see it so clearly. I wish I would have seen Amazon this clearly. I really wish I would have. I don't know what held me back from Amazon. I really have no idea. So anyway, I like Tesla, and I think you got to stay on the lookout for the next Tesla. What's going to be the next one that's really going to have a huge impact on everyone? Because Amazon has impacted everyone, absolutely everyone in the country, maybe even worldwide. Tesla's in the middle of that process. So what's the next one? I don't know if we have another CEO candidate like Jeff Bezos or Elon Musk. Like I don't know. Everyone talks about Dorsey with Twitter and Square, but they're okay. But they're not. They haven't made any money. They're not like a margin powerhouse or anything like that. Twitter still can't get off of its butt. It's been like, what was it, almost 10 years now? Was that 1, 2, 3, 4, 5, 6, 6.5 years? Still can't get off its own butt and figure out how to make a damn dollar. Too much political garbage. But yeah, like what's the next one that we can get? Because I knew about Tesla in 2012, 2013. And it would have been good to hold it from $20 up to 1,000. That's a 50x. That's pretty amazing. So you put $1,000 in Tesla, and that's $50,000 in 15 years, 8 years, I guess, 8 years. 1,000 to 50,000 in 8 years. That's not bad. That's not a bad thing. I mean, obviously they had their moments where they could have gone bankrupt, and they still have. Well, I think they're probably done with that now, but like I don't know what the next one is. I don't know what the next one is. And then you see a lot of these other ones that aren't really household names that do excellent, like a ServiceNow from 50 up to 400, which is almost a 10x over 5 or 6 years. Like there's these stocks that go on these crazy ass runs. Yeah, 50K in 8 years ain't bad. And then what if you can do that again? you know? But I honestly think like a service now back when it was at $22 to think in 8 years it'd be at 200. It's it's a paradigm shift for my mindset to try to accomplish that. And the time frame just see I don't know, it just seems so abstract from when you've been trading as long as I've been trading. The time frame, you're like, I gotta hold this fucking position for 8 years. I mean, if you got a bigger account, you could allocate a portion of your, allocate 10% of your portfolio to something like this, you know. And if you get a 50x, obviously that's going to make your account. But if you hyper focus, like if all you had was $1,000 and you put $1,000 in Tesla, like I even believed in Tesla back then. I actually considered just buying it and holding it, but I wasn't mature enough to do that. Today, I like to think I am. I mean, I got Tesla at good prices, but like in this cup and handle that it's in right now, it's like if this breaks down and doesn't rally through, am I mature enough to hold? I don't know. I mean, the temptation to sell if it breaks like 750 and then buy as it gets to 5, maybe that's too tempting. I have no idea. I don't know how I'm going to handle that. I got to be honest with you. I haven't, my mind is still spinning at the possibility of this dropping down and me having to confront that. I mean, yeah, it's interesting. But if you look at a lot of stock charts, in reality, if you look at a lot of stock charts and just find really high quality stocks that break out of bases, big bases like that, like AMD's an example, it had a huge base right here, and that's up, I don't know, I'm sitting down now, I can't see the numbers. Let me get up. My back was starting to hurt. There we go. Okay, so I mean, so there's a base right there's kind of a longer term breakout point right there. Let's take it from there. That's 437% in 1, 2, 3, in 4 years. That's really good too. And that's not 100% a year, by the way. That would be like a lot, like 1,600%. It's like 50% a year, I think, something like that, which is still pretty good. If you told yourself you were always going to apply the same money to a single stock and play the swings, I bet you could do better than holding. You can if it's done correctly. I've actually done that in Tesla. That's been my trading history with Tesla, and it's given me a slightly different perspective because I have been following this stock for a long time. Like I said, I saw it in over here 20. I don't know, maybe it was 2011, but anyway, 2012 when it was at 20 something bucks. And then I bought the high tide flag here and I traded it there. And then I traded this leg here and I traded this leg here and then I traded this leg here. So I've already basically taken every good leg out of Tesla. Now that money's gone into other ventures and it's done good and done bad over the years, but I've taken the leg out. I can't say I've traded every stock the same I've traded Tesla because I pay more attention to it. Pay much more attention to Tesla than I do, say, a Microsoft or an Amazon. So you look at an Amazon, and I just, for whatever reason, you know, like I don't know what the next Tesla and Amazon is. I don't know. But if you can find them and watch them, because the market's going to FUD them out. They're going to go through these downdraft periods, and it may not even necessarily be Amazon's fault, but every company goes through growing pains. So there's some to that too. So here's the 2001 high, the 2000 high right there, and yeah, it goes through growing pains. Then you get a lower base down here. You can start holding from here. You can hold from here. You can hold from here. But obviously, Amazon was going to do good things, and then like it really looks like a no-brainer now. But in the moment, I just wasn't something I was getting into. Then you got a Tesla, and you see the same pattern over and over again. These bases and these huge ramp ups, right? Yeah, Tesla, and you got Microsoft, which was in a sideways market until like 2013. Then it just ramped up from 40 to 200, which is pretty good. Obviously, Apple, Facebook, these much longer term perspectives on things. Facebook's, IPO breakout right there. Pretty textbook on that one. Well, TQQQ is kind of that, yeah. It's, I mean, TQQQ, if the market, I mean, everyone's always sketchy on the market, but I mean, yeah, this thing really, this thing is really super. It's just, yeah, if you just run a TQQQ strategy, I mean, if you can avoid a good amount of the downdrafts and get most of the up moves on the TQQQ, I mean, you're gonna be retiring in 10 years. A little tricky, like you go through these periods here, right, where you may get hit fairly substantially if the market falls apart quickly, right? Because this one it rallies up and then triple tops, rolls over, and then you're making good money here. But it's a longer term. Um, I think it's slightly different, Rob. I mean, you could. I think it just depends how you want to manage your portfolio. As I sit back down here, um, I mean, the whole point of TQQQ is based on accumulation and distribution, and you don't exactly have the same thing when you're in a single stock. You can't really look at it the exact same way. It's different. I mean, similar, but you don't really get. I don't know if you. I don't think you really have distribution days in a single stock. Like we can look at Tesla, I guess, because we've been using that as an example. How the hell's that 5 years? That's not 5 years. There we go. So let's take this cup and handle I bought, for instance, right? That was my intention. I actually don't think I did though, Rob, to be honest with you. I was actually keeping track of it on a post-it note, my super high tech strat of all my Tesla trades, which I mean I can look them up, but I actually don't think I did actually. I don't think I did. Okay, I know what you're saying. You're saying you can just buy more shares. Yeah, it's I can't disagree with you. And in all honesty, I mean that how would I mean that would have worked out fantastic. I think I ended up I think I inadvertently actually put half in. I think I had about the same amount number of shares, not the dollar value, but I see what you're saying, and I agree with you. And my thought process, this is actually the reason I was keeping track of my trades up here, which I don't have my sell mark up there, not that I need to, but is because I was thinking about buying the same number of share or dollar value, not number of shares. Yeah. Yeah, absolutely. With the market timing skills that we have, absolutely. Yeah, I completely agree with you. But it's just discipline. I'm not that disciplined generally. um, but yeah, I mean, could it be if I did that, I would probably have to open up a separate account for that. Yeah, to do that effectively, would probably be the best thing to do would be to open up a separate account and do that in that account because the funds just get too mixed. No, I see what you're saying though. And then, the question is to identify those stocks that are affecting everyone, you know. It's because that's I think that's the important thing. What stocks are just affecting everyone? Um, well, see, here's the thing. Like some stocks go through very long periods. Like, we can use again Tesla as an example. Tesla went through very, very long periods between my trades. I traded it here, and then I waited like 2 years to trade it here. You see what I'm saying? Like I don't oh wait, I think I traded some down here too. Anyway, I'll go like a year and more on Tesla without, at least I did. It'll take a long time sometimes for these things to form bases. Tesla did a bunch of garbage gobbledygook, which I think I may have had one trade in here. It's some low that I'm probably not thinking about at the moment. But yeah, I made some stupid bottom buy on Tesla that worked out really well. 250. I bought right there. I bought at 250 and then I think I sold up here somewhere. I don't remember, but yeah, I bought at 250. So this was another one. So this one would have gone basically a year without a trade and then yeah, I don't remember if I traded that or not. I get your point though. I get your point. I mean I guess the question is, yeah, develop a strategy around that. What are the companies that are actually doing excellent? Like right now, what would be the smaller companies that are going to be doing excellent? See, like what's the next Tesla? I don't know. I think that's the thing to do. Oh, you're leaving, babe? Oh, I didn't wake you up. I'm sorry. Yeah. Yeah, I think they do. I think they do. Crypto's a different market though, but I think it's easier to do it in the stock market than crypto because you have so many additional trading opportunities with crypto. And not to mention, crypto has zero fundamentals. So it's hard to say, oh, like we got a guy named Vlad in the Slack chat room that is super heavy into VIA for some reason. Vlad's like an OG to the community, and I love Vlad, but he's got this thing with VIA. He actually likes VIA so much he became one of their spokespeople, kind of like a public advocate for VIA. And he was talking to the Slack chat room today, like, I got too much VIA. So I'm like, I can't do that with a crypto. It's just I don't. But Tesla stock that's actually a tangible business, and you can see and feel what they're doing, and like that's a whole different ball game. That's something completely different. I don't know what the next Tesla's gonna be, but the next Tesla will probably be Tesla. Yeah, but I mean, Amazon, Apple, I mean, we're looking for MJ to have a similar thing, but the price action just says that that ain't happening. Like, yeah, I don't know what the next one's gonna be. Restoration Hardware, 4%. Dang, son. Shh, crazy. Looking at a dog outside walking with his family, and he's eyeballing something down the street, focused on it, ears back. Not sure what it is. Yeah, it is quite a bit of green, isn't it? Yeah. It's a lot. RH doing pretty good. MongoDB back up. Shouldn't have sold those. Those were really good. Soxol, loosely bullish. UAL. UAL actually looked pretty good. On that 5 minute chart, looks like maybe just a little shake out of the lows here. I don't know. I'm still a little scared of the Trump press conference on China. If he's going to throw sanctions back on China or tariffs back on China, ugh, no more tariff talk, please. I wonder what Trump is. Usually these things leak out ahead of time, so I wonder if we already know what it's going to be. Yeah, I agree with this sentiment right here. As long as there's no reason for the markets to think that trade truce is in jeopardy, any market fallout from more sanctions on China should be relatively modest. But if they get into any kind of a fight, then China will probably throw sanctions on. Who the hell knows? Oh, it's tomorrow. Oh, that was yesterday. Nothing about the content. Treasury yields plunge? 30-year bond at 1.42. Oh gosh. Oh, here we go. New York Fed President Williams says U.S. is not anywhere near its limit to run up debt. Let's check this out. All right, burgeoning levels of government debt are not posing a broader threat and have been necessary to battle the coronavirus pandemic, New York Fed President John Williams said Thursday. Even with the federal IOU at 25.6 trillion and counting, the central bank said there's still plenty of room to spend more. I don't think we're anywhere near the limit to that. Williams said during a webinar presentation by Stony Brook University, the US government is issuing a lot of debt right now and global investors are gobbling it up. Total government debt has jumped 2.2 trillion since just before the crisis began, an increase of 9.4% thanks in good part to the CARES Act that provides more than 2 trillion in rescue funds for an economy that could contract more than 40% in the second quarter. Congress has been debating additional stimulus could run to 3 trillion. The U.S. already has been on its way to budget deficit in excess of 1 trillion and will now likely be closer to 3 trillion. 310 billion in interest payment in fiscal 2020. Total held in relative check by record low interest rates for government debt, as the Fed has sent its benchmark borrowing rate to near zero, while the central bank officials has expressed a commitment to keep rates low for an extended period of time. Williams said he doesn't see the need for negative rates. Added he does not see the trillions in lending and liquidity programs that the Fed has initiated will lead to troublesome inflation. I don't see any problems right now in terms of deficits, Williams said. Obviously, in the long run, we have to make sure that the fiscal policies in the federal government is on a suitable, sustainable path. More concerned now with making sure money gets to the right places, particularly state and local governments. Nothing concrete. He mentioned debt markets gobbling them up. Interesting. Mitch McConnell, your face, dude. No wonder you're an asshole. Oh yeah, more yeah, I saw it too. I didn't mention it, but the Motley Fool ad, where is it at? There it is. They're always right there. Man who picked Apple and Bitcoin says, buy Genesis. What's Genesis? I don't know what Genesis is. Social media order? Does he have a social media order? What's an executive order? What was in it? I heard he was bitching, but I don't know if there was an actual order that he signed. Ahead of the finalizing order. What's the order? Here we go. Uh, Scale back tech industry liability protections. Oh, you know what the tech industry should do? They should ban all political conversation for like a week. Trump would be like, "Yeah, never mind, put it back up." The law that distinguishes tech platforms from publishing by shielding them from liability for their users' posts. So he wants to remove that? Well, they're just gonna shut down more posts, wouldn't they? If they're going to be held liable, why wouldn't they shut down posts that they could be sued for? That's going to remove like half the damn posts on Twitter, which would probably be a great thing. Yes, he just wants to sue them just because he's a dick. Tie the protections up to compliance with certain standards around child exploitation detection and reporting. Uh, oh. GNUS. Let's get back to some stocks. Oh, it's 8 o'clock. I got to bail here in a bit, guys.